right, welcome back, everyone. You are watching Squawk on the Street live from the New York Stock Exchange. It's going to be a big Friday, whether up or down. And right now, Yingli Green Energy, another IPO of a Chinese solar company, ticker YGE. There's been 4 or 5 of them. Bob Pisani was just talking about it over the past couple weeks. That's at the big board over at the NASDAQ, as you can see. Cartier North American CEO and actress Julianne Moore is there. Kramer, you see her, see, with the white pants. Cartier donating. A lot better than you, Kramer.
Hey, listen, I'm not a sexist.
Who did a better whistle?
I'm not a sexist.
Who did a better whistle? All right, our market reporters.
I'm gender blind, pal.
Kramer had a good whistle. All right, let's go to our market reporters. Bob Pisani is back, and as we've been saying, that might mean more up. Hey, Bob.
Hey, this is a much improved situation. Futures were at $14.95 a little after 6 a.m. Eastern time. We were down 6. Now we ended up 2 in the pre-open situation. Remember, bond yields came off of their highs this morning. That's certainly helping things out. The market had a very violent reaction the last 15 minutes on the Bill Gross comments here. Look, I'll make it simple for you. The bears say inflation is stronger than expected and the Fed's going to hike sometime down the road. The bulls say, look at the short end of the curve. We haven't seen any move in the short end of the curve. The Fed is on hold. You're misreading the data. So that's where we're at right now. By the way, you saw that people ringing the bell. Yingli. This is the 4th Chinese solar company that they've got down here at the New York Stock Exchange. Just going public. There it is at $11. We're waiting for it to start right here. 11 to 13 was the price. Why is there so many Chinese solar companies around? Because the power grid is not that strong outside of some of the big cities in China. They want to provide some kind of alternative energy, and they're going to try to be a world leader in the solar business. Wireless business picking up. You see National Semiconductor maybe opening at a 52-week high here today. They had great numbers yesterday. Guidance was better, and they increased the buyback right now here. So the bottom line here is, looks like the inventory glut that we saw earlier in the year for some of the chip makers in the cellular phone area is diminishing. And I also saw Texas Instruments also up about 2% in the pre-open. Let's go over to Rebecca Jarvis. She's standing by at the NASDAQ, and Rebecca is still waiting for Yingli Energy to open here. $11 is the IPO price. Back to you.
Thanks, Bob. Looking forward to checking back in with you when that does open to get a price. Here in focus, the Broadcom-Qualcomm dispute. It's been ongoing for many months and years now, and now you have Broadcom and Qualcomm getting a ruling from the International Trade Commission ruling to ban devices containing Qualcomm chips. You see Qualcomm shares to the upside by 1.8%. Jefferies weighing in there saying, look, it's really not that big of an impact right now. That's their take on it. Also, Qualcomm vowing to seek White House intervention, challenging that ruling. Broadcom shares to the upside by 1.9%. JMP Securities upgrading that name. Xilinx, on the other hand, down about 0.2%. They have lowered guidance or saying that guidance will come in, or their revenues will come in at the low end of guidance. Actel unchanged at the moment. That company saying revenues are going to fall flat. And Activision down only 0.1%, saying that their internal options probe found some misdated options there. One last thing, Apple shares to the upside by about 1% right now. Yesterday they hit an all-time high. Now let's head to Sharon Epperson. She's standing by at the NYMEX.
Well, Becca, we're seeing oil prices lower by $1 or so. A pretty sharp sell-off here in New York and in London as well. Brent crude under $70 a barrel. And here in New York, we're looking at NYMEX crude prices under $66 a barrel. Traders taking profits after yesterday's rally. The rally particularly sharp here in New York, largely due to some technical buying. A lot of buy stops taken out around 66.50 once that level was reached. Futures that we're seeing right now should be reflected at the pump perhaps next week. Good news for folks out there, Rick. Over to you in Chicago.
Well, thank you. Same dynamics, just a little bit more horsepower. Overseas rates in Europe jumping up overnight to
the NYSE.
All right, thanks so much to you, Bob O'Brien. And here we are in the Squawk Nest. We got 2 things. You got to hold on, Kramer.
Oh, sorry.
You got 2 buys.
What's that along with that?
2 buys.
Yeah.
Go.
Okay, listen, I got a piece of paper. 95 bucks, $5 upside, $1 downside. Yields 5 and change. What do you think? It's called a U.S. Treasury. You should buy it right now. That sounds pretty delicious. I mean, everyone is just running away from it.
You're buying the 10-year now. It's high.
I would buy the 10-year's a great piece. 5 and change yield, 94.
Some say it's like catching a falling knife, though. I mean, yields are going to go up.
I am a butcher block, friend.
You buy it now.
You bet.
All right, buy 1. Buy 2 is MON, Monsanto.
Biotech company masquerading as a seed company. This company's got more forward momentum than anything I've seen. The chemical companies all trade at low PEs. All the chemical analysts are valuing it like it's Dow Chemical. Give me a break.
How high?
It's Celgene.
Celgene?
It's Celgene.
How high does it go, Kramer?
Stock could tack on 8 points and still be very inexpensive versus the ag group.
All right, well, that's interesting because we've got an exclusive this afternoon. Street Signs, tune in, everyone. Hugh Grant, CEO of Monsanto, going to be joining us.
He's a double threat man.
He looks better than the other Hugh Grant.
Holy cow! 9.5 weeks was he in that? Which one was he in? 4 weddings, a funeral?
4 weddings and a funeral was the one where I liked him the best.
He was good in that, the guy. Monsanto, 4 weddings, that guy is really coming to play.
He sure is. You're going to see him this afternoon. Meantime, up next, Jason Trennert. He's on deck right now, sitting over to the side of us. Chief Investment Strategist at Strategic Research Partners. He's going to give us his 5 reasons why we're in a melt-up rally for stocks.
Look at me, I'm a big fat slob. I've got bigger than you did. I've got more chins than a Chinese phone book. I've not seen my willy in 2 years, which is long enough to declare I'm legally dead.
Being a fat bastard is no laughing matter. More than 400 million people worldwide are now considered obese. Stick around to find out why.
Good wine. Put me up on InBev.
That is a good one. Merrill Lynch thinks you can profit from the fight against fat. Kramer gave you an idea. We got a lot more coming your way. We'll be back. All right, welcome back on this Friday. Let's get straight to the street cap of the session. Tyco's board officially approving the breakup of the company into 3 publicly traded firms through a dividend distribution to shareholders. The split involves Tyco's healthcare unit and its electronics business. Dow Jones, publisher of the Wall Street Journal, adding change of control provisions for more than 100 top managers. That's a clear sign the family-controlled media empire is about to be sold. Also a clear sign that they're going to be getting maybe some extra cash payouts there. Our partners at the Wall Street Journal tell us the provisions protect the employees in case they are fired after a sale. And IBM says it's releasing software that can predict the spread of infectious diseases among countries. Named STEM, it has been donated to scientists and public health officials to better plan responses to things like the bird flu. Our next guest is still a big bull, forecasting the S&P 500 is going to go to 1,600 by the end of the year, the Dow to 13,750, NASDAQ at 2775. Recession unlikely, a lot of value in Japanese equities. All right, well, Jason Trennert joins us now. He is the Strategic Research Chief Investment Strategist. All right, Jace, so let's just lay it on the table. Bullish for the year, but that does not preclude, right, another 600, 800 points, whatever, a little bit of a sell-off.
It's very possible, but I think when you have problems like this, you have to go back to first principles and you say, what's really changed? And I don't think a lot has changed in the last week. The economy, if anything, is maybe a little bit stronger than people had expected. 3 months ago, people were worried about a recession. Now people are worried about an economy that's too strong. The Fed, though, the punchline is the Fed is not going to tighten again. The Fed's tightening cycle is over. If anything, they're more likely to ease. The liquidity situation is still very positive for this market.
That's big picture, but over the next week or two, you know, Kramer's sitting here saying, I'm a bull, but I want to be down today.
I want the market lower. I need a washout.
I think it's quite possible that could happen, but I'm kind of more of like a 6 to 12 month type of outlook, and I wouldn't mind seeing prices lower because I'd be a big buyer. The private equity put that people have talked about in this market is huge. Private equity funds are raising money like crazy. The supply of equities, if you look at the supply of equities from the government data, have declined precipitously because of share buybacks. Supply-demand situation couldn't be much better. Money growth is growing twice as fast as the growth in the economy. It's hard to fade this market.
But wait a second. 13,775. You're no bull. I mean, that is nothing.
Kramer's in the 14.5.
500 points. Hey, I'm going to the Hamptons on the Cannibal at 11:43 if you're telling me there's only 500 points upside.
That was
Give me a break. I'm that kind of guy.
Yeah, well, it was very bullish call at the beginning part of the year, and it seems more bullish now than it did a week ago. 1,600, I think, on the S&P 500, it's about 10% higher than it is now. The way the market usually works, as you know, it doesn't stop at fair value. I think fair value is 1,600. I wouldn't be surprised to see the market go to 1,650 at some point during this year.
That's better.
But I do think that there's a chance that you'll probably pull back later in the year as people get worried about an economy that's too strong.
One market last year, major market, did worse than the U.S.
Right.
And the U.S. did pretty darn well, but only one market did worse, and that was Japan. You are a bull.
I'm a bull on
you
Japan.
You are a bear.
Sell.
All right, let Jay make
the reason
15 seconds for your case and then a rebuttal.
The punchline is I think people are too bullish on developing markets, on the emerging markets. I think that there should be a big asset allocation trade away from India and China towards the U.S., Japan, and Europe. Japan, the reason why I'm bullish...
You went off.
Japan's a dead market other than Sony. No. Sony's got good breakup value.
The biggest, in some ways, Japan looks to me like the U.S. did in the early 80s. You have a lot of kind of ineffectual managements. You have a lot of potential management change there. And there's a focus on return on equity as opposed to market share. It's all good for shareholders. Economy itself is obviously not particularly great, and the demographics aren't great, but the management changes are positive.
Teldar. I buy the Teldar over there. That's
all right.
Blue Star.
You were probably in the womb during Wall Street. Wall Street.
Hey,
time out. Time out. Time out.
Womb
Thanks,
reference
Jace.
no good?
That brings us to our CNBC question of the day. Is the stock market heading for a summer swoon or a summer sizzle? Log on to CNBC.com to weigh in with your point of view today. Up next, David Faber's going to be along, talk about all those deals, plus with plus.
Just to say.
How could I have forgotten that? With millions of hungry heifers parading around the planet, can you fatten up your portfolio with stocks that help you try to slim down? Belly up, we'll dive into Wall Street's version of the old 96er on the other side of the break. But first, Liz Clayman with what you can expect on Morning Call. The very svelte Liz Clayman, may I add.
Woo, svelte. I like you more now, Aaron, even more than I already did. Jimmy, I'm with you. Can you believe Dow Jones has more managers than Teldar Paper?
They're sweet guys.
That's outrageous.
Protect everyone.
Coming up on Morning Call at the top of the hour, how to position your portfolio during these volatile triple-digit Dow loss times. We will explore a host of ideas for you as bond yields soar and equities shake, rattle, and roll. Could you pay an extra $2,000 a year to enter Manhattan? A hearing today on whether to charge motorists more to enter the city to get rid of congestion has some up in arms and others cheering. But will it crush commerce? And should the NYSE drop NY from its name? Squawk on the Street. We'll be right back after this short break.